Fintech Chatter, brought to you by Tier 1 People, leaders in Fintech executive search. Welcome to Fintech Chatter, the show where I connect with Fintech leaders for a bit of a chat. I'm your host, Dexter Cousins, and today's guest is Daniel Cannizzaro from Parpera. But before we speak to Daniel, make sure to give us a follow on your favorite podcast player, and don't forget to leave us a review. It really helps me in helping promote great founders like Daniel and great startups like Parpera. Dan, welcome to the show.
Thanks, Dexter. Really nice to be on the show. It's been a long time coming for us. I know we've been trying this a couple of times. We've even done a couple of recordings, but it's nice to finally have a chance to chat properly and not being in an airport.
Yeah, mate. I think Ben Ford kind of screwed up our recording the last time by walking past the camera and taking the autofocus off. So we had you and I talking and just two big blurred blobs in the background and a close-up of a Victoria coffee cup. We were having a chat, I guess, in that discussion, a little bit about the year that you'd had in 2022 and kind of, I was, I think just remarking in that chat, how much I admire, the kind of the persistence that you've shown despite some kind of major setbacks, which we'll talk about a little bit later on in the show, Dan. But before we do you want to kind of give our listeners a little bit of a background as to who Parpera are and what the business does?
So Parpera means fair wallet in Latin. And I decided to call it that because I wanted a name that would embody our purpose and be globally relevant as we seek a global ambition in the future. But the reason why I embodied our purpose is that we exist to make business easy for people through providing a fair and transparent offering that helps you focus more on what matters most to you. So what that means for a business owner is that we provide them with a business account, a debit card, the ability to onboard within 10 minutes, and then they'll get access to invoicing tools, the ability to categorize their transactions with business-related transactions, which then make tax time and bookkeeping and accounting easier, and it makes sure that you're in control and know what's happening with your business at any point in time. So save you time from worrying about your finances and more time for doing what you love most, which for many, it's either running their business or having the freedom to pursue their passions, or spending time with their family and friends, which is another key reason why people choose to adopt entrepreneurship or business ownership. We exist to serve micro business owners, so people with 0 to 4 employees, and we really specialize at the moment and have in the past on the non-employing, so the sole trader or that single director company that has chosen to run a business by themselves. They don't typically employ someone. But have all the needs of a business owner and need an easy way to solve them.
And with that kind of cohort that you're targeting, what are some of the trends that you've seen since you started Parpera?
So there are 2.5 million businesses now in Australia. So we're at 2.4 last year, a little bit over. And the cohort of businesses in Australia have continued to grow year on year. And it wasn't impacted by COVID. In the last 12 months, we've seen a 12% growth in sole traders. So there are, of the 2.4 million, 2.1 million, roughly 89% are micro businesses, and half of all businesses are not employing. So sole traders make up around 800,000 of businesses in Australia, and the balance of that 1.6 are not employing companies. And we've seen that being the fastest growing segment in Australia. So as I may have mentioned, 12% growth in the last year. And I believe that's being driven by a couple of different factors. One is we had COVID, where a lot of people were displaced from work, and it was kind of a realization that they wanted to pursue something new and give a business a try. We had lots of side hustles picking up, but we've also had economic factors as well. Stagnation in wages in certain sectors where people have had to supplement their income to keep up with the cost of living. And then it's also been easier than ever to start a digital business. And a lot of people have wanted to have a change in their desire and how they want to work and want to pursue purpose over the traditional 9 to 5. So there are probably some other trends that I've missed there, but that's sort of some of the key things we've seen in terms of talking to our members as well.
And so for these members that you have, what would you say is the big problem that Parpera is solving?
It starts off with a really simple problem, which is I want to keep my money separate. And so if you're a sole trader, you're not mandated to have a business account. However, a lot of them don't want to mix their personal and business money together. It causes really big problems for them, from keeping track of how their business is performing, but also at tax time. So the number one problem that we're seeing people join up with was help me keep my business and personal money separate. The next problem was to help them really understand their cash flow and understand their tax reporting obligations. And then if I take a step back from that, the way we look at the problem is we break it into jobs to be done. And so there are three key jobs to be done. One is help me receive and pay money simply and quickly. The second is help me maintain my cash flow and understand my tax obligations. And the third is help me gain access to personalized support and products and services tailored to my needs. And we've really been solving those first two, and we will look to solve that third one over time.
Yeah, this week we had big announcement for Henry, who are also kind of players in this space, of a 30 million Series B raise, which, given what we've seen in raises over the last kind of 6 to 12 months, suggests to me that what I took from Intersect last year was very much, I felt this space was going to be really hot in 2023. Are you kind of starting to see that traction as well?
Yeah, so we'll probably touch on this further on in the chat, but when I returned to Australia in 2019 and wanted to start a digital proposition, and I'll avoid the word digital bank, but effectively...
Are you allowed to say neobank in 2023? I think.
No, that's not a word that we can use. And from a regulatory perspective, we could never use that word anyway, because we were never a bank. So, but in other parts of the world, we would be seen as a neobank, and that would make sense to most people. In Australia, that word, for those that aren't familiar, it generally means that the company is going for a banking license. In fact, APRA mandates that the only time you can use the word bank in your name is if you're either in the application process of getting a banking license, or have a restricted license, or have a full license. So, but back to the point, when I did get back to Australia at that point in time, and I'd sort of lived through this in the UK. So I was in the UK between 2016 to 2019, and was really fortunate to be there, sort of right time, right place, and seeing the growth of Fintech there, where we had the likes of Monzo and Revolut really gaining pace. But then the business propositions followed, so the likes of Tide, the likes of Quanto in France, and many others around the world. And there was certainly a real acknowledgement back in 2018 over there that the gig economy, the solopreneur, the future of work, these are all trends that people were actively talking about. When I came back to Australia in 2019, even 2020, there was still a reluctance to acknowledge that was a thing here. I think we are a little bit slower. We tend to be a little bit slower in realizing some of these. I guess those are advanced markets, and whilst Australia is quite an advanced economy, we tend to lag a little bit. And I think we're starting to see it now, though. And COVID certainly accelerated it. And I think as some of the big macro shifts, when we talk about recent advancements in automation. Where all these people that are being laid off right now, which is a very unfortunate event, but where are the new jobs being created to accommodate for them, and where will the new jobs be in the future? And I think the answer, at least my hypothesis is that the answer in the future is that there won't be a replacement of one for one as the market picks back up. I think large organizations will seek to automate more. There will be new industries and new job titles that we don't know about yet, but a lot of people will either want to work for themselves, or will be forced into working for themselves. Yeah. And I think we're seeing that now really come into play in the Australian market as well.
Yeah, look, I mean, that's a hypothesis, Dan, that I've been working on since 2012, right? I was even on, I think, Ozbiz 2 years ago, and warning about ChatGPT, right? Not necessarily ChatGPT, but AI and the advancements that were happening, and how quickly that's going to displace jobs. And every time I've been through a downturn, what happens is companies lay off workers, reduce their costs, tend to then offshore, right? Or automate where they can. And those jobs, some of them come back, but not all of them do. And I think what we're going to see this time around is what you said, is that they won't go to India. They'll just be automated. There'll be, there'll be new jobs created, but absolutely, this thing of being, in charge of your own destiny, is something I've been trying to get across to my network for at least a decade now.
Yeah. And I think, we both had the opportunity to go to Singapore late last year and experience the Fintech Festival there and some of the key messages coming out of there. Look, I think it's really some of these hype topics, I'll call them. So, when there's been a lot of hype around blockchain, a lot of hype around the metaverse, a lot of hype about these AI and future technologies. And I think that they will all come. That's all going to be a thing. But what does that mean for the current workforce and say, millennials, Gen X, that are sort of the bulk of the workforce, and Gen Z to an extent? Will that be relevant, or will those skill sets actually need to be refreshed and adapted to a new world? That's probably what's going to be more likely. And again, I think there's just an opportunity now where people can see the opportunity to start a business and the things that they're good at and can pursue that as well. So I think it's easier than ever to start a business. I wouldn't say it's any easier to run a business. And I wouldn't necessarily say that, we're still in very uncertain times. So it's not necessarily the best time either. But, in contrast of that, there's no better time than the present. And I'm still very bullish on Parpera. I'm very bullish on the market opportunity. And I actually think the problem that we're solving is one that's existed for a long time. So it's not necessarily that there's this new technology that's come about and it's enabled us. It's actually the infrastructure is becoming available, which is allowing us to solve the problem easier and cheaper and faster. And therefore, we're able to then do that at a lower cost to the incumbents and therefore provide more value to our members.
Yeah. And having been in the recruitment game for 25 years now, prior to that, I was actually in the creative industry. In the creative industry, I think, you talk about the gig economy, and the creative industry has run a gig economy model pretty much its whole existence, right? Where people go in there, they're contractors, they're self-employed, they'll go in and maybe do a 3-month stint on a project, and then it's the next thing. Could even be running 2 or 3 projects at the same time. So I think the kind of this way of working isn't something that's new. I think the shift that's coming is that the blue collar workers are the ones that are going to now find that this perhaps is going to be a model that comes into their realm and their domain, which could, I think, change the way in which employment contracts work, which, I think that's my hypothesis, because I just can't see how employers, the amount of cost that it now, where you've got people who insist on working from home or working remotely, you kind of wonder, well, what's the point in a permanent contract? And then particularly if you look at our world, right, startups, scale-up businesses, most people have a life cycle of 12 to 18 months and then the business has outgrown them. So I think there's some real kind of, big factors that are coming in that are changing the employment model as well.
And so then to kind of go back to your original question around how things changed, I would say we were early in 2020 to launch this business. From a customer perspective, people have been signing up since then, and they still sign up today to a wait list, and that's been really inspiring to see that still the demand still being there despite what happened last year. And we'll cover that shortly. But I think if we look at sort of 2 other things that we haven't spoken about is one, what is the role that banks play in running a business? And traditionally, the role of a bank in society was to provide capital to unlock the friction that exists in trade. And so if you can make it easier for the flow of capital, then good things get done, hopefully, and then you can see the flow and effects of society. Except banks weren't designed to run a business; they were designed to provide capital for a business, and then the business would have to figure out how to run itself. Then you have the advent of accounting platforms in the 80s and 90s, because there was an acknowledgement that, hey, the way we write things down in a ledger is really inefficient, and the banks don't do that for you, but we can build this lovely accounting software that can aggregate your bank data. We'll show you a whole bunch of complex charts, and hey, you may not be able to do this yourself, so we'll actually sell that to you through accountants, and you'll pay the accountant and you'll pay for the subscription fee to the platform. And they've been wildly successful, those platforms. And now we're in a new era where actually we can say, you don't need the bank, because a platform such as Parpera can partner with one. So we'll know your bank transactions, and you don't necessarily need the accounting platform because, hey, you run a real simple business. not to detract from the value add to society, but actually it's not that complex, the accounting that goes on in your business. And therefore, if we could nudge you to categorize those transactions with some easy to understand transactions and take away the complexity and do that for you in the back end, actually we can combine both the bank and the accounting platform and potentially automate the accountant as well. And a previous startup that I had to Parpera that I, for reasons that are no longer really relevant, but I was never public about it. I did it for 6 months and then shut it down. And I think at the time I was just too ashamed to admit that I had done something and failed. But it was during my time at business school, and I tried to launch an AI tax advisor. And in hindsight, if I stuck at that could have been a really interesting play given where we are now. But I think these trends are all coming together now, where we can kind of tie together, better UX for banking, taking care of your invoicing, taking care of your cash flow. While your cash is sitting with us, then we can nudge you towards what you can do with that cash to get some value out of it while you're not using it, say if you're putting it aside for tax. And then because we have all the data, we can actually sort out the tax situation for you as well. And so that could mean that we either partner with an accountant or over time look to automate those more complex pieces.
Now, talking about the banking part, you had some real challenges last year. So you were one of the, I think, first businesses to partner with Vault on their banking as a service platform. Unfortunately, Vault Bank shut their doors in June, and very quickly you found yourself without a banking as a service provider. Do you want to just share with us that kind of situation and what you went through and kind of how you've managed to overcome that?
Yeah, so a bit of context. When I was sitting in London in 2018, and I'd been thinking about setting up a digital bank for 2 years, and I hadn't acted on it. A whole bunch of people said, "Don't do it. You're not going to make any money. You're not going to succeed." The whole usual stuff when you try to do something that's hard. And eventually, after seeing the success of the participants in the UK and other parts of the world, I said, "Look, there's no better time than now to do this." And I looked at Australia, and it looked like there was a huge opportunity. At the time, I understood that Rails Bank was coming to Australia to integrate with Vault. So the initial plan was to come back, integrate with Rails Bank, build on top of Vault, and be the first banking as a service enabled fintech. That took them 2 years longer than they had expected. And it took me 2 years longer than I had expected to get to a point where we were getting live. We probably could have, we raised our first round of capital on crowdfunding on Equitize in 2020. We had actually our first live beta on a different platform in January 21, and we should have been fully in market by April 21. I'd made the decision after we did a really deep due diligence on several vendors. But what was really important to me is that we partnered with a global banking as a service provider, or a provider that had global reach, because that would enable us to expand globally in the future, and that we had access to a bank, because that would provide safety. So I knew what the risks were going into this around how fragile the fintech ecosystem can be when things go wrong. And so that part actually played out the way it was meant to. So when Vault did go wrong, for lack of a better word or phrase, everyone got their money back and deposits were safe. So that was really, really good. And that happened really quickly. And we took care of our customers first. We launched in October 2021. Having what we were able to achieve with Rails Bank and Vault Bank was actually a market first for Australia. So it was a shame that what came about 9 months later in June, because we were just on the cusp of getting through the last parts of our implementation. So in March, we launched cards, and we grew from 100 to 550 businesses on the platform really quickly once cards were launched. So we were growing at 80% month on month. We were preparing for a large seed round. We were trying to get that done just as the markets were turning. So had we tried to do that in October the year before, would have been a lot easier. But by April 2022, when I was pitching and didn't know that the Vault thing was going to happen, it was already getting harder. You could see like the messaging from the global funds was that we're still open for seed. Locally, it was closing up fairly quickly, but locally, they've never really been open for fintech at the early stage anyway. Although it's getting better, and as you say, there's a bigger realization around the opportunity now. And then as we were getting quite progressed with a set of investors, and I got a phone call. What was it? The 28th of June, I think it was a Tuesday, and it was 30 minutes before the public was going to find out. And the phone call was, Vault's having their license taken away from APRA, and you're going to have to shut down all the accounts. and I had 30 minutes to. I was actually at a coffee with another fintech person at the time. They'd reached out the night before, and we caught up, and I had to leave like instantly and just run to the office, and the team was. The hardest part of it was we were really pushing hard. Like, so we'd finally gotten over the hurdle of integrating. That took way longer than it should have, and we were always ahead of the curve. But we're always waiting on our vendors to be ready. And we'd finally got through the hardest parts, and we were seeing the growth. And walking into the room, we had an office in Martin Place in a WeWork, and walking into the room, actually called my partner like a couple of minutes before it, and I said to her, like, something really terrible has happened, and transparent like that. That's like that for 10 seconds there. I shed a tear, and I'm like, and she's like, you'll be okay. And I'm like, yep. I was really worried about our members, and I was really worried about our team, because I just know how much effort went into it and how much dedication went into. We're really pushing hard. And so I walked in. They were mid stand up in the morning, and I just had to tell them like before I could tell them what happened, I just said, switch off the marketing. Because we had digital marketing running, switch off onboarding, and so they quickly scrambled to do that, and it was pretty easy. Like, it's all automated. And then once they did that, I said, look, this is what's happening, and we need to. And then I spent the next 3 hours drafting up a press release. We don't have our own PR function. We're a small startup, and so drafted up a release and basically shared what was happening. And I think we got some really good feedback around communication, and I think a big part of our values is fairness and transparency, and I think that's I'm really proud of the team of how they handled it, and the feedback we got from our investors and members was all really positive, and everyone's backed us to keep going. We had around $1 million in capital at the time, so we weren't running out of money at all, and so there was kind of some of the feedback we got from industry or just people that weren't close to us as business was, are you guys okay? Sorry to hear that you guys are failing. And it was kind of like we weren't. And it was a very weird situation to be in, because we still have and still have today all the foundations and structures of the business. The app, the way we developed it was that we weren't tightly integrated with Vault or Railsbank. We had an integration between our platform and Railsbank, but we designed it with the approach in mind that we would need to switch at some point in time. Either we would outgrow the partner or they would fail, or we would have some redundancy, because we had seen this happen with fintechs, with Wirecard and others in other markets. So that was really good. First challenge was make sure to take care of the members. We did that in day one, day two. Then take care of the team. So sat down with the team and said, okay, this is going to take us 3 to 6 months to rebuild. Some of those people that were on a journey had been on a journey already for close to 2 years. The value of the company and then your associated equity associated with that, like all that kind of, when you're thinking about all that sort of stuff, then that becomes a big question mark, like how we will recover. And we quickly sort of got commitment from most of the team. Is like, this is going to be the journey that we're on now. If you're a part of this journey, great. And if I understand if it's really hard to continue because you've put in so much effort, then now's a good time to step off the bus per se. And so we retained most of the core team, and there's still most of them are with us today. And I can't disclose who the partner is just yet, but hopefully I'll be able to in a week or so, or 2 weeks or so. But we found a partner within the 24 hours of it happening. We had already had a partnership agreement with them for a different piece of functionality, but then we were able to start the discussion around extending it. We did also go to market and speak to several other partners as well. But one of the big challenges of launching a fintech in Australia, there are 3 big challenges. One is regulatory. My strong views do not become an ADI. The second is infrastructure. So who will actually provide you, if you're not going to be a bank, who's going to provide you with the technology and the connectivity to the payment system? And then who can do that within the time constraints and within the cost profile that you're looking for as well, and the economics. So because Railsbank was quite innovative in their model, and we did find a partner that could provide us with actually better unit economics, which is really cool. And the feature set that we're going to relaunch with is going to be much better than what we had before, and more active, fuller than what we had before as well. So one of the key problems our members had is that we didn't have instant payments yet, and we didn't have Apple Pay yet, but that'll be there day one. So we found the vendor, but just because you find them doesn't mean that you start integrating immediately. So we started integrating in late October last year, and we're almost ready to launch. So then there was that period in between, and you say, well, you've got $1 million, but you need to make that last. And we've got a strong part of our values at Parpera is like, you need to be delivering value. And so if the platform's not live and you're not building anything because you can't integrate, well, it's very hard to deliver value. So we quickly scaled back all our costs, and I think that's really important in any crisis, that you scale back the cost. We left our offices. Everything that we could cut back, we did to save for retaining the core team, because we knew that we'd need our team to rebuild pretty quickly. Our engineers have been running pretty tough for like the whole 2.5 years we've been around, so they've never had a break. So during that period, we actually took 2 weeks off. We just took some time to take some of our leave balances and then regrouped on the other side and started rebuilding. And so that gave us an opportunity to actually learn from the journey. And whilst, in that early stage when you're trying to find product market fit and what's working, the other problem you have is that you're burning capital. And so the silver lining in this incident, it was kind of like having a big MVP that then stopped and allowed you to then fix what you could see was not working or could have been done better. And so that was really cool. So we actually got to review the whole business model and say, okay, well, if we need to build a profitable business now, which is what we need to do in this market, how will we do that, and what are the different things we need? And we've built some really cool stuff since. So we're close to coming back. The team is super motivated to get back to market.
Yeah. When you were going through that, Dan, and a lot of people kind of presumed you were dead and buried, where did you go for inspiration?
Building a business like Parpera is really, really hard. And that's not to disparage any other business. Business building is hard, full stop. But the reason why I did this in the first place is I wanted to take on a challenge that would keep me busy for a very long time. But I want to build a meaningful business. And I believe that Parpera can be a meaningful business in the way that it can help people. It can actually have a positive impact in society. And so when we talk about purpose, some people would say to me, Dan, maybe it's better just shut it down, because you're pretty much going to be building a whole new business. Shut it down and go for another one. Call this your first one, and maybe better luck for your next one. But it's not that simple. You don't just dream up a business. Some people do.
Yeah.
But for me, my origin story and my experiences all led to me doing this eventually. So I've had probably 2 other big kind of things that I was working towards in my career. And for me, they were big. For others, they may not be. But one of them was I wanted to go to business school at a top tier school, and I wanted to go to London Business School. And there's an entrance exam, and I was trying to balance that with getting promoted early in my early career, and I wanted to do everything at the same time as fast as I could. And my brother and I actually talk about this stuff. My brother's a PhD at Oxford at the moment studying robotics, and we sort of talk about it and we say, if you're going to do hard things, it'd be unreasonable to think that you're not going to fail. So if you want to try and do things that people don't usually do, when you're a perfectionist and when you've got high standards, it's really easy to get frustrated. But my learning was from previous attempts at stuff that appeared to me to be very hard at the time when I was trying it, was that if I failed the first time, I would allow kind of 6 months or 12 months to go by and I'd give up. And then I would look back after 12 months and say, well, I still really, really want to do that thing. And so this time around, I said to myself, well, you already know that you react that way. You know that you're very passionate about this and you know how to do it, and you've got the experience now of doing it once. Just keep going. And to be honest, it's not fun to redo things. I've always been the sort of person that likes to excel and be ahead of where I'm meant to be. I've never repeated a grade or anything like that. And nothing wrong with if you have, but for me, it's kind of feels like repeating a grade doing this again, because I've done all this stuff before. So the way I try to inspire myself or seek inspiration is look at how can we do it better, where can we improve, and look at it as an opportunity. And I think being a founder, let alone a fintech founder in Australia, is a real privilege. And if you look at it like that, I could look at it a different way. I could say this is a curse and I should have never done this. But for me,
I'm sure you do sometimes.
But for me, I feel like it's a real privilege, and I meet some really, really exciting people that have great talent, that have they've had great careers, and we catch up, and they catch up with me, and the grass is always greener. So if I have a down day in the last 6 months, I'll catch up with one of my former peers, and they'll be doing really well, and they're quite senior in their careers now, and they're like, Dan, I look at you and I say, you don't have to work for anyone anymore. And I kind of laugh at them back, because I say, well, that's actually not true. It's if this doesn't work out, I will, and I kind of work for myself and the investors and for my team and for our members. So so no, I was reflecting on this question. It was something you provided beforehand, and look, very early in my career, I realized not to compete with other people, not to compete with not to worry about your other competitors, just focus on you and what you're good at, and just continuing to execute. I think consistency over time delivers results. So as long as you show up every day, I'll be honest, there were some days in the last 6 months, and even some days while we're trying to get back to market, where being a founder, like, you just get slapped in the face every day by a new challenge, right? Yeah. And I joke with my partner at home, like, I don't know, let's see what it is today that comes up. And, they're not all critical issues, but they do weigh you down over time. And I think, like, I've just built a sense of resilience around, it just doesn't bother me. It's just kind of another part of the journey. And if you don't get comfortable with it, then it's very hard to last. And just find comfort in, if you're going to do hard stuff, it's going to be hard. So that's, I'm not sure if that's the greatest answer I could have given, but that's kind of how I think about it as well. So, I'm always a big believer in, like, I kind of compete with myself. It's like, how do you push yourself further? And I like to think of, I don't want to sound silly when saying this, but running a business is kind of like a little bit like being an athlete. And if you want to win the Olympics, people that win the Olympics train really, really hard for a very long time. And if you want to build a meaningful business, you're going to have to train by way of doing business for a really, really long time. So you just got to stay at it. Yeah.
So we, as you mentioned, we were at Singapore together November for the Fintech festival. It was kind of pretty exciting being there. I think everybody had an incredible time. Everybody was pumped, and one of the things that I love about going to Singapore is it's almost like being in a small business. I feel like it's an offsite strategy kind of meetup where I get fresh inspiration, can see a path, for the next 3 years. And I think when I was last at Singapore, which was 2019, it was really clear then that banking as a service was going to be the big thing over that 3-year period. And then I came, from the most recent FinTech festival, thinking, wow, I think really now blockchain, digital assets, we're getting to the point where that's going to become a real thing. What from your side, what were the things that you took? And also, what do you see as being kind of the most exciting area of FinTech right now?
For me, that conference, like, it was awesome to be. Actually, it was quite a big Australian founder cohort there, and I got to the best part of going there was actually connect with Australian founders and others in the industry such as yourself. Like, it was just that opportunity to be in the one place where we can all talk to each other. It's kind of like an intersect, but the benefit of being in another country where we're all away from everything else, and we kind of have really intense, focused conversations. So I spent most of my time with Australians, ironically. For me, there were a couple of learnings. One was, cryptocurrency or a government, a central bank digital currency, they're coming. That's going to be a thing. Is it going to be Bitcoin? Probably not. It's probably going to be, for us, a Reserve Bank issued digital coin. It feels like what governments are going to do, and it has to do a lot with sovereignty and around, do you really want a coin that's owned by some anonymous person that governs your life? And governments probably won't allow it. So to justify the borders that exist, they need currency to kind of help govern that, and culture and all that other stuff that goes into running a society. And so it sounds like that's going to be a thing when it's regulated and it's government issued. So it is coming, but not in a form that a lot of people talk about. Web3 got a lot of mentions. Again, I think it will come. It is here. The use cases are not as clear for the customers we serve. The other big thing was Fintech has really accelerated in Southeast Asia, and my view is Australia's fallen behind, and COVID didn't help us. So we didn't have the same capital that was available in other markets that was driving the growth. We didn't have the same migration of talent that was bringing in those fresh ideas and trying to build these types of businesses. But on the other side of that, there's opportunity, particularly for myself, where it's like, well, Parpera isn't going to have that many competitors. We have one or two in the market here, facing similar challenges at different stages. But it's kind of a market that we can own and really have a good crack at. And that was really inspiring because you could see that the trend had kicked off there and gone towards where we want to go here. The other learning was how the trend has shifted. Now that there's less venture capital in the market, the cost of customer acquisition is going down for both startups, but they're not spending as much. So then you had corporates that can actually afford to market again and acquire the customers they're losing. And startups are running out of money. So corporates are acquiring them or taking their talent for cheaper. And so the whole talent war is dissipating a little bit. And I think we're starting to see that sort of come through in the Australian market as well. So I think there's a lot of opportunity for any business that can stay the course through this downturn or recession or whatever you may want to call it. If you can survive, then on the other side, there's a huge amount of opportunity.
One question that I've kind of vowed to ask everybody this year, because and it's come from feedback that I get on the podcast, which is that it's now seen as almost like an archive or a resource for people within the industry to go and get ideas. From your side, Dan, I mean, what are the podcasts that you listen to regularly that give you fresh ideas, fresh perspectives?
Yeah, I was thinking about this question as well, and transparently, I don't listen to a lot of podcasts. So
neither do I, actually.
So I have listened to a couple of Fintech Chatter podcasts and have enjoyed them. I tune in every now and then to the All In podcast, but usually just snippets of it. And I read a lot of random business press and trade press on Fintech. I still think a lot of the stuff we're implementing here has been done five years ago in the UK, and we kind of have this backlog of ideas, and you can kind of learn about sort of what's worked and what hasn't worked. I don't feel like anything really innovative has come to market recently, and then maybe I'm being too critical. I don't yet see the application. I understand why people are working on. I understand why there's a whole lot of investment and excitement about Web3 and Metaverse and all those future projects. But the problem we're solving is a practical problem that exists now. And the tools to solve them they exist and they have existed. It's just bringing together is complex, and making it easy for people is complex. And so my time is largely taken up with how do I achieve what we're trying to achieve, and just manage through the volatility that includes. So not the most exciting answer for you listeners, but honestly, Dexter, without just saying this because I'm on the show, but it is a great archive, what you've done. And I think you're playing a really important part in the ecosystem. It's really hard to learn about fintech in Australia because there aren't that many of them. And had I not spent the time in London, I don't know if I would have been able to learn about this in Australia. It would have been much more difficult.
Yeah. And what exciting news have you got to share? I know you can't give us, your new partner, but
So I was trying to time this podcast with an announcement, but as we've touched on, things always take a little bit longer than you'd like. So look, we are on track to come back to market, which is really exciting for us. There's always a slight chance that something can happen that may stop that, but we're really confident about the market. We're really confident about the segment we're serving and how we're serving them. We are starting to kick off a fundraise. So if there's anyone listening that could be interested in this segment and proposition, I'd always be happy to chat. But realistically, the big announcements will come in the next probably 2 to 4 weeks, hopefully. And outside of that, we've got some really exciting new features, which are going to make it really easy for people to do business. So we were previously serving sole traders. Now we'll be able to serve companies as well, which is really cool. So that doubles our target addressable market. And previously, we were only serving really service-based businesses, but we've built something else that can work really well for goods-based businesses as well. So excited to share more on that as we go forward, and hopefully that Parpera can be built into something that makes a difference in the Australian market and continues to be part of the ecosystem.
Fantastic. And where can people get in touch with you, Dan?
So you're always welcome to reach out on LinkedIn, but if you'd like to contact me directly, you can email me at daniel@parpera.com, and I'll get back to you as soon as possible.
Well, Dan, it's been fantastic to chat with you. Congrats. Look, huge respect for how you've just dug in there and, persevered, and the resilience that you and the team have shown over this last 12 months. It's a really important story to share, and I'm sure it's one that will inspire a lot of people who maybe are going through something similar right now.
Yeah, thank you, Dexter, and thanks for having me on the show. And I guess like the last key message I'll leave behind is just don't give up.
Yeah, awesome. Well, you can connect with me, Dexter Cousins, on LinkedIn and Twitter. Thanks for listening. If you're coming back, thanks so much for your support. And if you are new to the show, make sure to follow us and leave a review. It really helps me in promoting great founders like Dan and great Aussie startups like Parpera. Until the next episode, stay safe